Let's go straight to Charles Farrell in London, who's here with the latest on how this huge bailout is playing out. Charles, it looked as if this was going to be, initially at least the way futures were trading, a big bit of news to the market, welcomed, but I'm not sure things have turned out quite so well, yes?
No, indeed, Michael. The relief rally lasted about 2.5, 3 hours. Markets here in Europe opened quite a good bit stronger, particularly the all-important indicator Spanish government bond yields, but that evaporated in dramatic fashion. Spanish bond yields are now about 20 basis points higher than they were on Friday, indicating that investors are actually even less interested in purchasing Spanish debt. This is a very bad outcome for Spain and also a very bad outcome for the Eurozone. There are a lot of people, policy circles, who had hoped that a big demonstration that the Eurozone was ready to stand behind Spanish banks would remove that big uncertainty from the Spanish government. Right. That has not happened.
Why did the money go to the government and not to the banks? What was the calculation behind that?
Well, there are a couple of reasons. The first and most important one is that the rest of the Eurozone didn't particularly want to invest in Spanish banks. If the Eurozone rescue money was to go directly to the banks, that would mean that Eurozone governments, the European taxpayers, would be holding shares in Spanish banking companies. Those are, needless to say, extremely risky investments and not at all what the European Bailout Fund has in mind. They would much rather lend to the government of Spain, and in fact, they are a preferred creditor of the government of Spain when they lend to the government. So that was the way these bailout funds were designed, and there was no real way to change that.
All right, that's all we have time for. Charles, thanks very much. A very dramatic situation in Europe right now. Let's now turn to Sudeep Reddy in Washington. Just a quick look at European markets to see how they're trading, and you'll see that they are still up, but this is, as Charles was telling us, down from where we opened, and those Spanish bond yields are certainly something to be a little worried about. Now we'll turn to Sudeep Reddy in Washington, who look at the US implications for this. Of course, a big issue coming up in this election year. Europe may well be stealing the thunder of the candidates. Sudeep, what does this mean for President Obama at this stage? And he sort of addressed it very heavily in a press conference just on Friday.
Exactly. What you've seen from President Obama was on Friday some public pressuring of Europe to accompany his private guidance that he's been offering over the last 2 years. And this is really a careful game for the president, because what he's trying to do is be helpful and encouraging to Europe to try to push them along, largely to solve the threat that of Europe hanging over the global economy and hitting the U.S. As you well know, Michael, it's been the third straight spring in which troubles overseas have hit the U.S. economy. And so it's pretty clear now that if Europe were to go down at a time like this, the president is going to have very, very great difficulty making the case to voters in the fall that he's turned around the economy. If he can at least buy some time, and if Europe can buy some time and put this off for a few more months, as they've been doing for 2 years, then he might have a shot at making that case to voters.
Yeah, I mean, there's a number of pitfalls that just could come up in this month alone. We've got Greek elections June 17th, the G20, of course, Obama himself will be attending that just immediately after that. Eurozone finance ministers on the 21st, and then this big summit at the end of the month. So a lot of focus is going to be shifted away from the US to Europe, but is there much that Obama himself, or anybody for that matter in the US, can do to help steer the course of events over there?
Well, that's a great question, a very important one in assessing where we are at this moment in the world, where the entire world is waiting on Europe. There's influence and there's leverage. The U.S. does have some influence. It is the world's largest economy, and despite how much we beat up on ourselves, it is still somewhat respected around the world as a major voice. And so having a major voice speak out like the way President Obama did does matter, because if you're a leader sitting in Europe and you see that not only leaders in China and Japan and Australia are calling on you, but also the leader of the free world is calling on you to do something to save the world economy, then it might raise the chances that you'll act and that you'll be bolder than you would be otherwise. But the other half of this is leverage, and the U.S. obviously has little to no leverage. There's nothing that we as a country can hold out and say, if you don't act strongly, then you won't get this from us. And so it's really a very careful exercise of trying to prod and nudge Europe along without antagonizing them, which is a very difficult thing to do.
And what about the election campaign? Can we expect to see Europe itself enter into the rhetoric and the discussion? I mean, it seems to have been a bit of a sideshow still, really. And most naturally focuses on domestic issues and what policies can be made here. But do we expect it to become more of a discussion point and, say, an element of the debates toward the election?
Absolutely. If Europe were to face more turmoil in the next 3 or 4 months and remain in the news, then we're probably going to be discussing in our campaign here the U.S. economy seen through the lens of Europe. There's this debate about whether you need immediate austerity or some other kind of growth measures. There's the debate about, of course, debt loads and deficits. And everything that Europe is discussing, we're going to probably see transplanted in some awkward and poor way onto the U.S. debate. It's inevitable that something like that will happen. It may not be the most constructive thing, but it really plays to some of the themes that we're facing here and all advanced economies are facing in terms of dealing with high debt loads, very little policy space to deal with that, right. And certainly a very anxious electorate.
Yeah, there's a lot of familiarity there. All right, Sudeep, thank you very much for your time. We'll have much more on this huge story, of course, as it develops.